Welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner that is currently powered down, like actually quite a bit of you are as well. So we did run that poll, so stay tuned for the results of that poll a little on later down the line. So today we're going to be talking about, obviously like we mentioned in the title of the video, cryptocurrency being a Ponzi scheme, why it is not a Ponzi scheme, especially in the wake of everything going on with FTX. We're also going to be talking about some craziness as BlackRock has now decided to basically bail out Core Scientific with a $17 million loan. This is actually quite interesting, and it is going to obviously affect the market, in my opinion, in an unfair manner, but, you know, leave it to traditional finance to impact the mining market in a, you know, an unfair manner, right? Other than that, we're also going to be talking about the rest of the cryptocurrency, specifically Bitcoin miners, and how bad they've been crushed during 2023. And Bitcoin miner Bitfarms CEO has resigned and was replaced by the COO. In addition to all of this, we are going to be talking about Caspa meeting its crowdfunding goal to continue developing and moving into developing for both Dagnite as well as, of course, moving the programming language from Golang to Rust. We'll be talking about the new mining calculator for Methane coming from Scott's Mining Crypto. He's also doing some really cool stuff with training for ASIC repair, as well as doing some teaching on how to spin up your own 1 to 5 megawatt mining farm. Definitely some valuable information as far as that goes, so definitely check him out. Then we're also going to be talking about some miner releases for the week, as well as mining profitability. We'll get into all of that and more right after a word from today's sponsor, which I just realized I didn't set up. I thought I was completely prepared, and I was not. Oh, was I? I was.
Due to the crypto market correction, GPU prices are going down. It's a great opportunity to expand, which is why Octominer is having a sale. They manufacture the best mining rigs in the industry and supply rigs to some of the largest GPU mining farms around the world. On average, they manufacture 2,000 to 4,000 rigs per month, and currently around 2% of the total Ethereum net hash rate is running in Octominer rigs. They are also an official AMD blockchain partner. Starting July 25th and going through July 29th, use the code OCTO10-072922 on checkout to get 10% off your entire order on their website. Please reach out to them at support@octominer.com for any questions.
Hello and welcome back, everybody. So first things first, I want to thank everybody that continues to support the channel through, of course, the bear market. Hopefully what that means is that we persevere as goats and we end up on top during the next bull run. But you never know. Maybe it's all over and it's all done and it's all dead and all the naysayers are correct. Maybe it is just a Ponzi scheme. Or is it? Let's go ahead and hop into this opinion piece from CoinDesk. It goes on to say, since crypto exchange FTX collapsed into bankruptcy, and there we go, boo, haha, and its Ponzi-like shell game with investor money was revealed, many commentators have doubled down on their criticism of cryptocurrencies as a type of Ponzi scheme. For those who need a review, Ponzi schemes start with an initial investment from an early round of investors, and the money is then used and spent for the purposes of the general partners or issuers of the investment product. When the time comes that the original investors want to withdraw their funds, their investments are returned through funds invested by subsequent rounds of investors, giving the illusion of solvency and returns. Similarly, FTX kept making funds available to earlier investors on its exchange using the deposits of subsequent investors. Those earlier investments had been swept away to Alameda Research, an affiliated hedge fund. Does anybody find that definition of a Ponzi scheme to be eerily close to the United States dollar? If not, you should look at what's going on with the United States dollar and this $1 trillion infrastructure bill and all the money being sent that we can't afford to other countries for wars that don't actually affect us in any manner. There we go. The FTX revelations have led a chorus of voices, including actor Ben McKenzie and Nobel laureate economist Paul Krugman, to allege that cryptocurrencies in general are a Ponzi scheme. Why crypto isn't a Ponzi scheme? Stick Shark says also in chat, Social Security is definitely a Ponzi scheme. And as a millennial, you have no chance at getting Social Security. So glad you kept paying that. For one thing, tokens like Bitcoin and Ether do hold value, even in down markets, and don't depend on inflows of new money to pay off investors. Is that true? So if we look at Ethereum, is that actually true? Because once we unlock staking, I believe that this statement from CoinDesk is false, meaning that as soon as unstaking is unlocked in 2023, presumably around between March and June, in the Shanghai upgrade, when they have promised to unlock withdrawals from the, of course, staked nodes, people are going to be unstaking. That will require, as initial investors, right? Those are the initial investors. It will require somebody to buy up and restake. So I think from the perspective of Ethereum, and if you include in, of course, the VCs and the rest of everything going on, once unstaking is released in the Shanghai upgrade, I would posture that Ethereum will definitely be, and right now is just a disguised Ponzi scheme. So rather, holders of these tokens can exchange them for other items of value or fiat currency anytime they can find a counterparty willing to take their crypto. There is no central entity giving these tokens the illusion of value. See, this is where I disagree on the Ethereum front once again. There is a single central entity giving the tokens value by basically artificial scarcity through it being locked up in a node being staked, right? Like, that's essentially it. I don't know. I think there's a clear distinction between Bitcoin and Ethereum that's not being presented here. The investing public's willingness to pay $17,000 or $21,000 or $68,000 for one Bitcoin determines the ultimate market value of the token. The most popular cryptocurrencies are available to deliver value in and of themselves without the manipulations of a Ponzi scheme operator. What cryptos can do, and as a reminder to financial advisors, cryptocurrencies do have fundamentals and real-world use cases. Here are a handful of functions that cryptocurrencies provide. Number one, medium of exchange. As 2022 comes to a close, cryptocurrencies can be used as a medium of exchange at hundreds of retailers, including AMC Theaters, Virgin Galactic, and Cheap Air. Many of these retailers use BitPay, a service that for a small fee converts crypto into the currency of a vendor's choice within the flow of a transaction. Holders of Bitcoin can also convert their coins into fiat cash at Bitcoin ATMs or via a debit card prepaid with their tokens. And while many people argue that the volatility of Bitcoin and other popular cryptocurrencies make them unfit as a medium of exchange, stablecoins that don't fluctuate in value are on the rise. The reputation of stablecoins was tested this year with the collapse of some algorithmic stablecoins like Terra UST. However, they still have the potential to overtake paper currency by accommodating fast, safe, and precise digital payments. Central banks are taking this challenge seriously by working to develop digital currencies of their own. And see, this is the problem though. When we talk about a medium of exchange and we talk about the fundamentals of crypto and integrating, essentially central banks here, which sounds like to be a proponent for. So keep an eye on CoinDesk as they try to convince you to fall deeper and deeper into the matrix and succumb to gross capitalism and consumerism, I should say, not capitalism, gross consumerism, and the removal of any sort of longevity of your savings account with a CBDC. Let's just make sure that we're on the same page here, you and I. This is the incorrect direction, boasting to go into the direction of a central bank digital currency as a defense to cryptocurrency being a Ponzi scheme doesn't work if we are already looking at the original point I made at the beginning of the video, which was compare their definition of a Ponzi scheme to the US dollar and how it currently functions with the Federal Reserve. Foreign exchange. Using tokens for cross-border remittance continues to be one of the more popular uses for cryptocurrency. While many critics have lambasted the volatility and uncertainty of cryptocurrencies compared with fiat currencies like the US dollar, many other international currencies suffer from high volatility and inflationary pressures far beyond those felt by the dollar. Tokens like Bitcoin are still able to move across borders faster and cheaper than fiat currency. Here's the deal though. This will obviously garner a ton of scrutiny from the nation states because right now, as it sits, the U.S. is currently specifically utilizing their control over the U.S. dollar to sanction and slap other countries that they don't agree with on the wrist and say, bad country, do what we want. And in place of that, of course, on the rise is Bitcoin being that replacement for these countries. And the problem is that nobody that has control is willing to or will want to ever give that control up. Therefore, when we are talking about foreign exchange, cool, CoinDesk is like, this is a positive. I would agree. However, I don't think that the people that they are arguing the case for would agree. Meaning like, yes, I, as an individual that agrees with Bitcoin and the white paper and the fundamentals of it, agree with, this foreign exchange revelation being awesome as it pertains to digital currencies and so on. The U.S. government is not going to agree that this is an advancement, right? So it's kind of like, yes, you're correct from my perspective, but if we open our eyes and take a step back and look at the grander picture, this argument isn't going to hold any weight to the people that they're trying to convince. Decentralized applications. Blockchain technology and digital tokens are being applied to problems far beyond those involving investors, advisors, exchanges, and digital broker-dealers. The technology is being applied to issues in real estate, agriculture, healthcare, gaming, and supply chain management, among others. Tokens distributed through initial coin offerings are programmable assets that use smart contracts to automatically execute transactions if certain conditions are met without the need of an intermediary. Many industries, not just financial, can benefit from smart contracts that eliminate the need for intermediaries. Once again, you are talking about taking an industry revolution from a business that currently runs it and giving it and putting it into the hands of the individual, right? Taking it out of the hands of an industry that is making money on that currently and putting it into the hands of the individual. This presents a plethora of problems, right? Because we've been talking about this for a long time. In fact, I just did a video only talking about wallets, and the video, just that video alone, demonstrates the problems that we encounter when we start talking about making this move from, traditional finance to decentralized applications and so on. If you don't have a central management control, what you end up with, of course, is going to be a stronger need for personal responsibility, which nobody in this day and age wants to take, especially anybody millennial generation and under, which is already like, okay, convenience over everything else, right? You aren't going to convince somebody, unfortunately, that Spider-Man is a good hero and the motto of, with great power comes great responsibility. People don't even care about that anymore, right? Spider-Man's a lost concept on a majority of people these days. So they'd much rather just have convenience, right? Stuff your face, get fat. And if anybody is like, hey, maybe you're out of shape, you should just take care of yourself, take care of your health, call them a name and say that they're wrong and move on and take a pill to solve everything. This is the kind of generation that we live in, the generations that are upbringing. So if you want to make this argument that people are going to value something like this, I have very, very low confidence that anybody's going to value any of this. I have even lower confidence as I look at things like analytics on YouTube and where it shifts when we talk about cryptocurrency. Everybody's interested in the bullshit coins, the quick buck maybe makers like the Shiba Inus, the scams like Hex and the scams like SafeMoon, and nobody is interested in the people that are actually doing the real work at the bottom of this and trying to do it for the principled standpoints. It's gone. You can look at the amount of viewers that are on this channel compared to the amount of viewers that are watching Butt Boy Crypto, and you have your case in point right there. Nobody gives a flying about personal responsibility or individual financial responsibility or like autonomy. Like that, nobody cares. Just give it to me, feed it to me, take whatever you want in return. You're just giving up all of your energy to all of these individual companies. It's absolutely infuriating. And yes, decentralized applications, great idea. Will anybody give a shit? Probably not. It's just so frustrating at this point. Yield. In 2022, Ethereum, the blockchain represented by Ether, the second largest cryptocurrency by market capitalization, underwent a transformation from a proof-of-work blockchain to a proof-of-stake blockchain, offering holders of Ether the opportunity to generate yield by staking transactions on the blockchain. As a result, it has become much easier for many crypto investors to take some income out of their holdings without selling a position. But so-called yield farming opportunities have existed for several years in decentralized finance. While some of these opportunities are rife with risk and potential fraud, others offer investors the chance to receive more income more efficiently than they would via a low-risk stock or bond, even in the current high-interest rate regime. I'm not actually necessarily sure this is true, meaning that, like, if I look at most of the yield options within crypto, all of the CeFi ones are gone, right? So your BlockFis, or significantly decreased, right? Or they're significantly decreased in places like Coinbase or Crypto.com, that sort of thing. And then if we go decentralized, I mean, what we saw was a ton of different collapses affected by Terra Luna. So is your yield farming actually a safe investment in the current, ecosystem of cryptocurrency with it being so rife of fraud and scams and so on? My argument would be no, right? And I don't think that you're going to convince the people that, once again, they're trying to convince with this article that that is actually a safe, valid opportunity for a majority of people. It's like, I want to read why this is like, I want to agree with everything they say, but when I read everything they say, it doesn't actually seem to actually defend in the manner that it needs to defend, right? And it seems to have quite poor remarks in general. Many investors are going to bet that blockchain will continue to proliferate and the demand for cryptocurrencies will increase again, driving prices upward from their 2022 swoon. While these may often be pie-in-the-sky hopes for easy money, some credible analysts also expect that the value of major tokens like Bitcoin and Ether will eventually begin to rise, perhaps growing beyond the peaks reached over a year ago. Now, I mean, if you've been following the cycle long enough and you trust in the cycle, personally I do, it's not financial advice, you already know that this is going to happen, right? It's a given. this is the same thing. Like, we've talked about it so many dang times, but this is the exact same cycle that we've seen over since the inception of Bitcoin. Now, some things that like I got wrong, right? That we have to like be clear about. The halving of other coins doesn't mean shit. If Caspa halves, it doesn't mean shit. If Ravencoin halves, it doesn't mean shit. The only thing that matters at the end of the day is the halving of Bitcoin on the effective price of anything, pretty much. And so what you have to do is basically plan around, at least what I am looking at in general, is that I have to plan completely around the halving of Bitcoin for my investment opportunities as it pertains to cryptocurrency and nothing else, right? And this is really where it gets down to the plain facts that you have to look at when you're looking into cryptocurrency fundamentally. And it does come down to the fact that nothing else really matters other than Bitcoin if we're talking about the macro scale on the halving, right? Like, everybody wants to act like there's going to be like another breakout and a decoupling, but that just doesn't appear to prove to be the case. That being said, what was their argument? Will we see peaks beyond what we saw it reach over a year ago? If we hold true to the cycle, then yes, in 2025, maybe about halfway through, somewhere around there in 2025, we'll see a peak of Bitcoin begin to rise. After that, over the next year, it will continue to rise to 3 times the previous high. So basically take $70,000 and multiply that times 3, and you're looking at $210,000 would be the peak of Bitcoin on the next cycle if we're just basing off the previous cycle and doing rough numbers, and potentially Ethereum. But to be completely frank, Bitcoin's the only thing that matters. And if Ethereum unlocks staking here in the next year during a bear market, they could just basically completely tank and destroy their entire project over there, in my humble opinion. Which is funny because obviously I'm an advocate for unlocking staking. I always have been. But if I'm being realistic, I know the fact of the matter is that we're in a bear market, and a lot of people that have a bunch of staked Ethereum probably want to get the out, bro. And so if they unlock that during the bear market, you're going to have too much selling pressure, and I don't think it's wise for them to do so. If they could do a staggered one, maybe that makes sense. But also, if they don't, they risk, of course, contagion on the DeFi market with all of the staked Ethereum. So it's kind of a damned if you do, damned if you don't. We've been talking about this for a long time with Ethereum, and there's lots of concerns surrounding it. BlackRock gives bankrupt Bitcoin miner Core Scientific a new $17 million loan. We've talked about this a lot when it comes to Bitcoin mining. What is the number one problem with Bitcoin mining, right? Specifically the hardware. Actually, the hardware was originally specifically the only problem, right? Because you had a single company, essentially at the very beginning, Bitmain, manufacturing the miners, mining on themselves until they developed a new miner, then selling the old miner, and then just having a competitive advantage on the network, right? This was obviously a huge problem. Plus, made it absolutely impossible for the average human being or the average worker to ever get into it. I mean, this is kind of the problem with almost everything in life. It's always funny that we get these kind of, work hard and do what I did and you'll make tons of money. And then you find out that they had a $250,000 investment from their parents to do something. You're like, okay, cool, dude. Glad you worked hard. Glad you got that initial investment and that it worked out for you. But there's a whole bunch of other people over here that are living like hand to mouth. Is not going to work for them, right? So why was mining Ethereum such an amazing opportunity for people? Was because you could do it on a GPU. And yes, even with the increase of cost for the GPU due to the demand for them, it was still within reach of the average consumer, which meant you could actually start participating in the ecosystem, like the economy, in the manner in which everybody always preaches to you, which is buy assets that generate income. Okay. Almost everybody can understand that and start generating income, but the barrier to entry is so far away for a lot of people. And that is what made basically mining with GPUs is so enticing, especially to me. That's why I wanted to teach everybody, because it's like, hey, look, there's this thing that can take us from level 1 to level 2, and then maybe we can start moving on to other things, right? This was what the principle was. But then you start like seeing, obviously with Bitcoin, this get locked down into individual companies, and the barrier to entry gets astronomically high, right? Then you're like, okay, well, the price of it's come down, but at the same time now, the price of power for the general consumer across the board has increased to the point to where you basically have to own a power company or be utilizing so much power that you can negotiate a power agreement that actually is profitable, which means you have to have also the money to invest in all of the miners that are going to utilize that power. And you have this kind of weird situation where and then we'll get into the third one, but between the power costs and the restricted access to the hardware, Bitcoin mining becomes nearly impossible to get into. You add the trifecta here, which is of course kickbacks in places like the state of Texas for turning off your miners, to, of course, people that utilize a certain amount of power. And then Texas takes the payback that they give them during the summer and they charge the general consumer, right? The little guy. And you got this trifecta of BS that you just can't get around, right? And it's pretty intense when you look at it, the amount of investment that has to go into it. And even still, these Bitcoin mining companies with all of the advantages in the world fail because of their greed, right? And we've talked about this before. Is Bitcoin basically designed in a manner that forces greed to fail because of the halving cycle, right? You have the price go way up, the price of the miners go up, and what happened is all the Bitcoin miners ordered a bunch of mining machines at a inflated cost, and they didn't get shipped till later. And then basically the assets didn't meet the value of the loan, which put them in a compromised position. And you go, okay, well, maybe not too big to fail, right? But as you know, with the banks and everything else in this entire world, too big to fail is too big to fail, and large companies get bailed out. And that is what's happening here now. We have BlackRock giving Bitcoin miner Core Scientific a $17 million loan. It already was Core's largest shareholder. It held $37.9 million of the miner's secured convertible notes. And the investment bank BlackRock has committed $17 million. Hold on. Quick cough. $17 million to bankrupt Bitcoin miner Core Scientific as part of a new $75 million loan from the miner's secured convertible note holders, according to the U.S. Securities and Exchange Commission filing that was filed on Thursday. BlackRock, which is Core Scientific's largest shareholder according to FactSet data, already held $37.9 million in secured convertible notes as of Wednesday. The latest $17 million is part of the new $75 million convertible notes, which are part of Core's prearranged bankruptcy process, the filing says. In a prearranged bankruptcy, the debtor reaches some sort of agreement with its creditors before officially filing for bankruptcy. Core Scientific, the largest miner by computing power, filed for Chapter 11 on December 21st. The move comes as miners in general have been squeezed by high energy costs and low Bitcoin prices. Core noted that it expects support from some of its convertible note holders in the form of 2 debtor in possession facilities totaling up to $75 million. According to the restructuring plan, the secured debt convertible note holders will get equity. The current equity and unsecured holders will get warrants so that as the company grows, they will get more shares. Its chief mining officer, Russell Can, told CoinDesk. Out of the total $75 million, the lenders have already committed $57 million, including BlackRock's new loan to the miner. The DIP facility has a maturity date of June 21st, 2023, with terms to extend to September 21st, according to the new filing. Shares of Core Scientific trade at 8 cents on Friday afternoon. Core first warned of the risk of bankruptcy in late October and said it wouldn't be paying some of its loan installments, sending its shares plummeting 80% on the NASDAQ. In November, it reiterated that it may run out of money by the end of this year. Compute North, another major firm in the mining business, filed for Chapter 11 bankruptcy in late September. Crypto miner Argo blockchain narrowly avoided bankruptcy after getting a $100 million bailout from Mike Novogratz Galaxy Digital this week. BlackRock, Vanguard, and Fidelity are among a few of the TradeFi giants that invested in Bitcoin miners during the bull run, as shares of publicly traded miners offered a faster way to get exposure to the sector without having to buy Bitcoin. Basically, what we're seeing here is BlackRock, well, not just BlackRock, but BlackRock helping facilitate, essentially here in this manner, Core to absolve all its debt through bankruptcy and then continue to function as a company and basically continue to operate, right? That's pretty much what we're looking at when we start talking about DIP and the way that they're manipulating all this. Do I understand it fully? No, I probably should do some more research, definitely, so I understand how all this business works. To me, it's extremely frustrating as, we see these failures kind of get bailed out in funny fashions, right? That being said, Bitcoin miner Bitfarms CEO has resigned and is replaced by the COO, the Chief Operating Officer. The outgoing CEO co-founded the Canadian company in 2017. Emilio Grodzki, there we go, co-founder and CEO of Canadian Bitcoin miner Bitfarms, has resigned effectively immediately. According to a company statement on Thursday, President and Chief Operating Officer Jeffrey Morphy has been promoted as his replacement. The co-founder of the company in 2017 with Nicholas Bonta, Grodzki will remain as director. Bonta will move from executive chairman to chairman of the board. Quote, in a little over 2 years, Jeff helped transform Bitfarms from a purely Canadian company trading on the TSX Venture Exchange with 5 farms in Quebec to an international powerhouse traded on both the NASDAQ and TSX with 10 operating farms in 4 countries, driving over 4.4 exahash a second today. Bonta said in the statement, exahash is a measure of computing power. The valuations of Bitcoin miners has suffered with high energy costs and falling Bitcoin prices. Sentiment in the sector was further shaken by the bankruptcies of Compute North and Core Scientific and the looming possibility of more companies filing for Chapter 11 protection like Greenridge Generation. Bitfarms hasn't been spared. Its stock is down 92% this year, and the company has a market cap of just $85 million. Bitfarms has been trying to reduce its debt burden to stay afloat. Last month, it paid $27 million in an effort to improve its balance sheet. The company, which mostly uses hydroelectric energy to mine Bitcoin, has 10 mining centers located in Canada, US, Paraguay, and Argentina. Its shares were up 3.5% in pre-market trading on Thursday. Here we go. Yeah, Paul, they are getting people are getting future share promises when we're talking about Core Scientific. You're correct. And thanks for the $20, Patrick. Good to see you in chat, by the way. Bitcoin miners got crushed by crypto winter. 2023 may bring more pain. Let's go ahead and get into this. This should be a wrap up of all the negativity and FUD, I guess, surrounding the Bitcoin mining market. Bitcoin miners had a rough 2022, showing how to not build a mining business. However, industry experts don't see 2023 as much better unless markets improve significantly, which of course I think, as we know, right? Once again, not financial advice. This is just my observation. According to the halving cycle of Bitcoin, 2023 will not be better. 2023 will maybe start to see recovery near the end of it, right? But I think No, not significant recovery. Things are going to get worse, right? So this is purely based off of historical performance. History doesn't always directly repeat, but in the case of Bitcoin, it appears to quite frequently. So this is kind of what we can expect, right? The mining industry started 2022 off strong with what seemed like ample capital to expand, but high energy prices, increasing competition for Bitcoin blocks, and a bear market hit miners, knocking out those with high leverage. The sector was shaken by bankruptcies and loan defaults. And hold on just one second. All right. Need some water there. And next year will likely bring even more pain as miners struggle to bolster their balance sheets and operations. But it will also present an opportunity for those in a position to buy assets, as well as for those that can improve their margins with new innovations. CoinDesk spoke to some of the top executives and analysts in Bitcoin mining to review past year and predict trends for 2023. Here's what they said. Growth didn't come. Industry participants say that lots of money was spent over the last year to boost hash rate, a measure of computing power on the Bitcoin network, but that in many cases, those investments didn't pay off as companies loaded up on debt to finance growth, only to see the economics of crypto mining break down. Quote, many miners acted too deterministically, end quote, projecting Bitcoin would hit $100,000 and not even considering that the price would drop below $20,000. I want you guys to remember this on the next cycle. So let's say 2025, Bitcoin hits $210,000. That's my exit point, right? Like that's the, I should have pulled out a little bit earlier point, right? If we're talking about like averaging up. If I'm looking at it personally and not financial advice, and I get in perfectly and I'm able to kind of buy all the way up to the next run, buy all the way through that run, it's time to start taking a look at it once it hits that triple of whatever the previous cycle's top was, right? So we already mentioned that earlier. That would be like 70,000 times 3, like 210,000. Pull the F out, right? That's kind of like, if you were looking at it as objectively as possible, that's when you would be like, all right, we're done, right? It's not too dissimilar from this previous, you get like 21,000 times 3 at 63,000, on Bitcoin, you should have been like, whoa, I'm getting the F out now, right? That's pretty much because it's happened every time, right? I didn't do it. I've even seen it. I knew it, talked about it, and didn't do it. Because that's how emotionally attached you can be to something that blinds you, right? That's just it at the end of the day. Does that mean you're not supporting Bitcoin if you play that game, right? This is the other thing, right? Like people will be like, well, you don't really believe in Bitcoin then, or they want to like sell you on hopium. No, like we'll be the ones fighting through the bear market to keep the network alive while you go bankrupt. That's what it will be, right? So don't play those games with people. Realize exactly what's happening and don't get emotionally attached to it. That's my goal, right? And like, it's so easy to look at it and see it. The problem is that we don't execute. The problem with everything in life is that you don't execute, that I don't execute, right? Everything all of the mistakes, all of the regrets primarily focus on one thing, which is lack of execution. So stick to the plan. Like they made it, like it's funny how easy it is to look at, right? And then you go, oh, I saw that coming. I didn't do anything. Well, that's you and everybody else, right? That's you and that's 99.9% of the population. To be the 0.1%, you got to strip away that emotion that says, oh, well, it could go to 100,000. No, it couldn't. Based on previous performance, there is absolutely zero chance that Bitcoin was going to go to 100,000 this cycle, right? And next cycle, there is zero chance it's going to go to 500,000, right? That's the mindset. Because I'll tell you what's going to happen. It's going to hit like over 200,000. People are going to be like, well, it's going to 500,000, right? Because Michael Saylor said, don't listen to him. Don't do it. I'm telling myself that right now. Don't listen to him. It's false, bro. Quote, there aren't many ways to financially materialize those plans. One either sells Bitcoin, borrows debts, or issues equity. When selling mined Bitcoins was barely enough to cover OPEX, operating expenses, many opted for debt financing as the equity market turned cold, said Wolfie Zhao, head of the research at the Miner Mag, the data and research arm of the mining consultancy Blocks Bridge. On the flip side, lenders were too optimistic. Many had not been able to properly assess the risks associated with such mining rigs backed loans, given that this is the first cycle in which such loans were given out. And that's fair, right? These mistakes are going to happen. But if you paid attention to the ASIC mining market, you knew from previous cycles that the price of an ASIC miner is directly related to the price of the cryptocurrency. Now, if we were talking about GPU-backed loans, that actually you probably would have played out a lot better than you did off of ASIC-backed loans. Yes, the GPU market was inflated, but not nearly to the extent that the ASIC mining market was inflated. And so, clearly, if you were looking, like, it's absolutely baffling that there wasn't like one company, like one lender that was like, hold on, let me do some previous research on this. Oh, look at this. When Bitcoin was 20,000 and S9 was X amount. And then when it dipped and S9 was worth nothing, right? And then did that calculation and said, well, you know, if we do this, we're putting out a loan on something that's going to significantly lose value based on the price of Bitcoin. Like, that one, I still don't understand how the asset or the mining rig backed loans ever became a thing in the first place. Like, I get the way the U.S. economy works, at least in the U.S. economy works. Like, if we're talking about like housing loans, the way they're doing the car loans, right? Where they almost don't even give a shit, right? They're just like, take it. We know you can't pay it back and we know it's going to devalue, but just take the loan anyways. And then we'll wreck your credit and get the asset back and resell it. That's pretty much how this works. But the lenders can't, I don't think, like, if you lose that amount of value, right? We're talking about going from like, an S19 Pro being $12,000 to $15,000 going all the way down to being like $2,500. Like, it's too much of a drop, dude. And for nobody to catch that is kind of wild to me. Some miners saw their debt to equity ratio, a measure that shows a company's financial leverage, more than triple in the third quarter, according to the Miner Mag data. Unsurprisingly, miners that had high debt to equity ratios like Core Scientific, Green Ridge Generation, and Stronghold Digital Mining have had to either file for bankruptcy or restructure their debt obligations. Many miners also failed to hedge their risks against a falling Bitcoin price. Quote, Bitcoin miners have much to learn from traditional commodity producing industries like oil and gas. Instead of using financial instruments to increase their long oil exposure, oil producers hedge their exposure by selling oil futures. Hopefully, this bear market will inspire miners to decrease their Bitcoin price risk through more sophisticated risk management. Jaron Mellerud, an analyst at Luxor Technologies, a provider of Bitcoin mining services, said. Luxor opened a derivatives desk to sell hedging products to miners in October, although the idea of hedging with derivatives had already started to sow its seeds with the miners as the broader market crumbled. Quote, I really think investors want two things. They want transparency and they want predictability. And that's what hedging brings to a miner, said Chris Bay, founder and CEO of digital asset trading firm Enhanced Digital Group. Bay's firm provides hedging products to miners that are trying to implement risk management strategies. Other companies, such as crypto-focused financial services firm Galaxy Digital and Singapore-based digital asset management platform Met Alpha, are also providing hedging services to miners. The Miner Mag's ZAL pointed out it wasn't only over-leverage that had brought some miners to their knees, but also a lack of treasury management. Quote, if Core had been selling half of its mined Bitcoin every month and holding the rest since January 2021, it likely wouldn't be so troubled as it is now, while still having a few thousand Bitcoins on its balance sheet to capture the long-term upside, he said. Referring to Core Scientific, a miner that filed for bankruptcy in December. It's all about cash flow, boys. I mean, if you're going to integrate, and that's the thing that, like, because I was talking about this earlier, you get that hopium that's going to keep going up. But like, if you're going to be running basically a business that integrates between traditional finance, right, and cryptocurrency, the fact of the matter is you have to treat cryptocurrency like you would treat any other commodity, right? Which means that you have to treat it in this manner where you focus on a balance sheet that is primarily cash. And I think that will remain true until the digital transformation is complete. Now, if you guys would like to hear me talk more about the digital transformation and where that goes in the future, which will completely change your strategy as far as all of this is concerned, we can talk about that on another platform later over on Locals, which you can check the link out for in the live chat. Or, of course, go watch any one of my old videos about it. We talk about it a lot. That doesn't mean that right now, when you are integrating in between these two, that your strategy completely abandons a good cash balance sheet, right? And this is just the things you learn, right? Instead, the world's largest miner by hash rate waited until May when the market pain started to really kick into selling its digital assets, ZAL said. Miners that had a high proportion of debt relative to their Bitcoin production have found themselves underwater. 5 of the 6 companies with the largest net debts per Bitcoin mined have had some level of restructure since the second half of this year, with the exception of Marathon Digital Holdings, ZAL said. The analyst thinks that Marathon has bucked the trend in part because the mining firm raised $750 million last year in unsecured convertible notes with a 1% coupon rate. Core Scientific, by contrast, raised $500 million in secured convertible notes with a 10% rate. Obviously, that's wildly worse. Like, so much worse. It's like so much worse, bro. Oh, that's painful. Marathon is also working to reduce its debt obligations, the firm told CoinDesk. There is more pain ahead. CEO of Canadian miner Hut 8 predicts the worst is yet to come in terms of capitulation and bankruptcies, particularly in the first half of 2023, and she's not sure that relief will come in the second half. Luxor's Vera said he expects many companies to be taken private, saying companies can gain efficiencies by hosting and running machines. But founder of Kawa, a mining and venture funding firm, said buyers may be better off just purchasing Bitcoin rather than dealing with the hassles of owning and operating machines. And this is something that becomes an argument once again every halving cycle in the bear market, which is it's unprofitable to mine. So instead of mining, what you should do is just buy Bitcoin. Now, this falters from a fundamental perspective if you were trying to get clean Bitcoin, that sweet, sweet virgin Bitcoin, which we have talked about plenty of times before, and I highly recommend you go ahead and watch some of the videos on virgin Bitcoin. But the idea of virgin Bitcoin is this, is that essentially it is Bitcoin that has not touched any exchanges or any other wallets. The only way to obtain virgin Bitcoin is by mining it. And by mining it, it means that it's touched no exchange, it's touched no other wallets, and it has zero, basically, reason for the government to confiscate it. Because as we know right now, the way that it functions is the US government tries to bust some centralized exchange. Your crypto went through it at some point. They bust you and they confiscate it because, well, it's related to a crime. And then, you know, the rich get richer and the poor get poorer. So there is still that argument, even in a bear market, for mining your Bitcoin and not purchasing it. I just want to make that extremely clear. But this argument is indicative of being near the bottom. This argument is a repeated argument over the halving cycle of Bitcoin. It happened before a few times, and it will happen again after the next halving cycle. This is just par for the course, and you can start to pick this stuff out as you follow it, right? You follow this channel, you'll start to see this stuff. It's clear as day. It's written, right? It's almost as if it's etched in stone, like the 10 commandments of crypto. It's just, it is what it is. You will see this stuff every time. For the rest of the pack, the year looks like a year of survival and recovery. Unless we see a full-scale bull market, which I doubt we will, miners will use 2023 to strengthen their balance sheets and improve their operating efficiencies. The year's biggest trends will be cost minimization and debt reduction, Mellerud said. The power struggle. In 2023, miners will not only have to find the best energy deals, but get creative about how they can lower their costs or bring in revenue by tweaking their power consumption and supply, industry experts say. As margins continue to compress, miners will have to look at how they can participate in demand response programs, meaning selling power back to the grid in times of high demand, as well as recapturing heat from mining rigs and using stranded energy, Bolovic said. Miners who have a real grasp on the processes, policies, regulations, and technical know-how of these adjacent industries will gain an edge over other miners, he said. It is definitely good to get into understanding all of this stuff. I'm working on it from the power perspective, not necessarily all of this. Hopefully I can get you guys some information at some point. I think Bitsby Trippin is one who, we could definitely use some more information on all of that from. Crypto mining is becoming a bigger part of the energy industry, and by the end of 2023, more companies will need to be vertically integrated with their own power source in order to maintain long-term stable operation. And we talked about this before, right? We were just talking about it. The fact of the matter is you end up in a position where you almost have to be a power company to mine crypto. And this is kind of a problem, right? It's crazy. And then you might even have to be the nation state to do it. I don't know. It just gets a little nutty. So it goes on to say, this is according to the CEO of Enerhash, a Hungary-based company that runs blockchain data centers. Halving is when the number of Bitcoin mined per block drops by 50%. And that's every 4 years or so. Another lesson related to the importance of managing power costs is on hosting, the business model in which firms bring in revenue for owning and operating the infrastructure. High energy prices and low Bitcoin prices have been particularly hard on this model, Zach Bradford, CEO of crypto miner CleanSpark, said. Compute North, the first big firm in the industry to go bankrupt, was primarily a hosting firm. Core Scientific was also losing money in its hosting business, about $10 million in the third quarter. Mining firms like DigiHost, Green Regeneration, and Ergo Blockchain that relied on natural gas or the electricity grid for their power saw their costs skyrocket in the third quarter, according to the data from Miner Mag. And that happened to me as well, right? Costs of power just went up 300% for me overnight. Boom, gone. The power company was like, hey, you have a good business? Fuck your business. And I was like, okay, cool, thanks. Oh, the good old days, my friends. The trend of cost per Bitcoin produced over the year looks very similar to the U.S. average household energy price increase this year. The average of all major mining companies' cost of the production per Bitcoin mined has gone up 7% in Q3 compared to the Q1, Zhao said. As miners try to become more efficient and bring down power costs, they might end up taking a counterintuitive path, underclocking mining machines. That's the practice of reducing energy consumption and the total hash rate to improve energy efficiency. If you guys are interested in mining Litecoin and Dogecoin, the X5, the Gold Shell X5, which I showed you guys here before, you can actually overclock it straight out of the box and undervolt it straight out of the box. It's getting some of the best efficiencies. Now, I don't have an L7, but when I was looking at L7 efficiencies, I'm beating it on the X5. It's pretty amazing. You can get like super, super low power consumption on those. Just kind of a quick note. It's kind of cool. They're still a little expensive, I think, but if those get down to like, you know, reasonable prices, I think it's going to be pretty tempting to pick a bunch of those up. So, other than that, Gagnon, Chief Mining Officer at Canadian Bitfarms, said that line earlier. Nascent technologies like immersion and hydrocooling are also becoming more popular, but it's uncertain whether miners will deploy them at scale in future because of cost concerns. Immersion cooling entails submerging. Yeah, and I don't think, like, there's a few things, like, people always want to be like, go solar, bro, or go immersion. And it's like, yeah, but your up cost is so high and your return is so low. Like, it's going to take you forever to pay that off. Maybe now's the time to invest, but the time to invest in solar is like, I don't know. The price of solar appears to only be going up. It's not really like settling out, unfortunately. Solar is kind of frustrating in that manner. As far as immersion, like, no. And as far as the liquid cooled Bitmain miners, I don't trust them yet. I'm going to wait till those are deployed for a while. There's like 30 points of failure. I'm obviously exaggerating, but I think it was still pretty high, like 16 points of failure when I was looking at the machine at the mining conference. 16 points of failure for a leak on a liquid cooled loop is a terrible idea. The way WhatsMiner's doing it's way more interesting, by the way. They're doing a single U rack with one water block over all the hash boards. So they're laying the hash boards flat, right? On like a 1U rack. So for those that a 1U rack would be like one server thickness, essentially kind of 4 screws in like a server rack. WhatsMiner's working on one that's essentially like they lay the hash boards flat on there and then they lay the water block on top of that. And then they only have 2 points of connection, right? The in and the out. That's a much better, in my opinion, that's going to be a much better design from a longevity standpoint. A lot fewer points of failure. I think if you're going to go water cooling, why are you sticking with the traditional box size where you're, lining up the hash boards vertically next to each other? When you have this option to lay them flat, like, it's just not a lot of thought went into Bitmain's design, in my humble opinion. It's really stupid. Because basically it's like, we got all these hash boards in, out, in, out, in, out, in, out, in, out, in, out. It's like, no, lay the motherfuckers flat, put one water block over it, have one in, one out. Come on. Dear Lord. Quote, even though the current mining economics has disincentivized miners from experimenting with these new technologies, we do expect to still see progress made in 2023 to advance the technology and lower cost foundries, Bolovic said. Aidan Killick, President and Chief Operating Officer at Canadian crypto miner Hive Blockchain, touted the Hive Buzz miners, a new mining rig built using Intel's INTIC high anticipated block scale chip. These mining machines will be for the first ASIC miner deployed by any of the major public crypto mining companies and designed in-house, he said. Obviously, this is going to be a big deal once Intel gets this going, and I guess it's going straight to Hive, which kind of sucks, but it is what it is. I think there's also one that's supposed to go. I think some of these are going to, what is it? Help me. Block? Is it what Jack Dorsey's company as well? Because Intel's only building for other companies. They won't be selling it to the consumer market, right? Kind of sucks. So, the evolving geography of mining. The past year started with a noticeable centralization of the Bitcoin mining hash rate in the US in January. The US accounted for about 38% of computing power on the Bitcoin blockchain, and Canada almost 7%, according to the Center for Alternative Finance at the University of Cambridge. Next year, that trend might be broken. Luxor's Mellerud and COO Ethan Vera both expect miners to migrate to South America, the Middle East, and Southeast Asia, due to availability of cheap electricity. Now, this is already proving to be true, especially in areas where, how do we put this? The approval to build out infrastructure is a lot, or the red tape to build out infrastructure is a lot less, right? And this is something that's going to become, I think, increasingly important when we start to see the elevation of third world countries due to cryptocurrency. We've already seen a little bit with stablecoins, right? Argentina, we talk about Venezuela and Digibyte, Argentina and stablecoins. We talk about how Bitcoin is helping poorer people in poor countries be less poor. That's pretty much the entire point of cryptocurrency in the first place, in my humble opinion. Help poorer people be less poor. That's really that's it. If we can accomplish that with crypto, then I don't really care where I end up in this entire thing. That is where it sits. What gets really interesting is when we start talking about being able to build out infrastructure to mine Bitcoin and have less red tape in third world countries, but at the end of the day also starts doing interesting things like, well, that infrastructure also provides electricity to that area, which never had electricity before, right? That generation of Bitcoin also generates some sort of income for that particular region. There are so many benefits, right? Humanitarian benefits from this perspective that outpace anything else in any other industry. There is actual profit-driven incentive, which means you are following capitalism, which obviously, as we've seen, is what drives innovation, right? And it's so important when we start talking about why this works in the way it does, is there's that incentive for somebody to go in and say, well, I can profit off of this, but also while I'm profiting off of this, I built a dam, right? I built my own dam in whatever it is, South America. There's this city, this community around it. I hired this community to help run it. Now this community that had no power, whatever it is, had no access to clean water, whatever else, now has all of that infrastructure, whereas like previously it didn't. This is where the potential for Bitcoin mining and cryptocurrency in general does have throughout any bear market as well. But especially the incentives start to grow in a bear market, meaning that almost the actual goal you would want to see is happening during the bear market more than it would in the bull run, right? Because the bull run, everybody's just going to go try to get the most power wherever they can in any country possible. Whereas bear market, you got to get creative, and then it starts basically building the incentive structure for you to start upgrading infrastructure for people that may not currently have it. It's a really interesting trajectory. It already is being done. I've already like worked with people, seen the videos, kind of talked to people about how this all works, and it's really cool stuff. Hut8's Leverton said that this decentralization is her hope, given that Bitcoin is supposed to be a distributed network, not aggregated in one particular jurisdiction, although she noted that political instability could be an obstacle in some countries. Environmental concerns. Many places are concerned about Bitcoin mining's energy use and its impact on local communities, and in 2022 they started setting limits. In the past year, New York State enacted a 2-year moratorium on new Bitcoin mining operations. Lawmakers in the U.S. are targeting the industry's energy use. Utilities in 3 Canadian provinces have stopped approving new Bitcoin mining connections to the grid, and a bill is under consideration in Kazakhstan that will cap the energy availability to miners. Industry experts said they don't expect any regulation on the federal level in the US or Canada in the upcoming year. But local or state governments might continue to place restrictions on the industry. this is where things are going to get extremely interesting too, because I bet you that will end up along party lines. And I know everybody hates it when we bring up the obvious, but that will mean that in states that traditionally lean blue, you will probably see more restrictions on Bitcoin mining because the obvious leaning towards the environmental impact, right? We talked about this with one of the lobbyists in New York going over the moratorium stuff. It's pretty clear. If you want to ignore that and get mad at me for stating the obvious, then fine, go do that. Probably just get out of crypto in the first place anyways. Look, we can't ignore what will happen or what is happening because it hurts people's feelings. It is what it is. Like, if we look at this, it looks like the most friendly states tend to be red towards cryptocurrency mining, and the most unfriendly states for crypto, and not even just mining, but especially mining, and the most unfriendly states appear to be blue right now. So what does that mean? You could probably find a blue politician that maybe supports it, but you need to be looking at that policy, right? Look at that policy specifically as it pertains to Bitcoin mining, cryptocurrency mining, and crypto in general. Look at that and then make your decision, right? I'm not telling you to just go blindly vote red. I'm telling you, there might be somewhere in the primary where you can vote against it. But if we look at what's been happening with New York, right, it leans towards this. If we look at what's been happening with Texas, for example, it leans towards supporting more Bitcoin miners. Actually, to a detriment, though, like we talked about earlier with the way that they show favoritism to large miners. So it can go too far, right? Gagnon of Bitfarms sees this small-scale regulation as an important testing ground for any federal laws to come in the years ahead. Vera, however, cautioned that the moratorium set by New York State sets a challenging precedent for the rest of the U.S. for expansion of new mining farms. New site developments across states controlled by Democrats are likely to be targeted by regulation. It's extremely frustrating that people want to try to cancel you or get you in trouble for like literally just saying what's happening. Okay. This is happening. I'm sorry, it's happening. It is so frustrating that we're about crypto here. We're about cryptocurrency mining. We want positive regulation. Actually, no regulation in general. I'd more lean towards libertarianism as far as all this goes. But we want at least positive regulation towards cryptocurrency mining. The Democrats are not doing that right now. Okay. It's just it. It's that simple. Mellerud said that in Europe, the European Union regulators will be more aggressive toward Bitcoin miners in 2023. And as the continent struggles with its energy crisis, energy-intensive industries like Bitcoin miners become natural scapegoats that regulators could target to score some cheap political point, he said. Boom. All right, ladies and gentlemen, boys and girls, Caspa has been funded. Their goal of 70 million Caspa has been complete. This does mean that if you're a holder of Caspa, I would assume you probably feel pretty bullish, even though it's been going down over the past month pretty significantly. The future is bright. The future is bright because there should be some work being done finally on moving it from the Go language to Rust. And in addition to that, as part of that, KIP2 will be implemented, which is Dagnite. We talked about this, of course, with a core dev on an interview. I highly recommend listening to his explanation of it so you guys get a full idea of what's going on here. But we're talking about faster, better, all that sort of stuff as far as transaction speeds go. Block times per second, blocks per second, transactions per second, all of that stuff getting increased, going pretty good there. I think a lot of this is obviously from a technical perspective, everything is the most exciting stuff happening, in my opinion, right now is going on with Caspa, because what we're talking about after all of these implementations is the fastest cryptocurrency in existence. Not the fastest proof of work cryptocurrency, the fastest cryptocurrency. And that is exciting. We're not talking about, right, just the fastest proof of work. Because right now, that's pretty low. We're talking about beating out Solana's transactions per second, but with the security and the decentralization of proof of work. So pretty bullish as far as that is concerned. I think anybody that's following me on Twitter should be pretty clear. And as we talked about a little bit last week on this, no, Caspa is not a Bitcoin, okay? Caspa isn't Bitcoin. Caspa will not fill that role because you still have the people problem within Caspa. Does that mean that I have a problem with the people that are participating in Caspa? No, but I don't think that any coin that has community driven support or like does all this sort of stuff or like it's a different thing. It's a different beast. It's not going to it's fundamentally flawed from the very get-go because of the structure of it, okay? And as long as you can accept that, you can move on. It's like the same problems I have like with Zelcore, right? Like, I'm not upset. Like, I can separate the people that are working on it. It needs to be very clear. I can separate the people that are working on it, right? The manner in which it's being worked on, and then the clear deviations from fundamentals that are there, right? For example, Flux in the Zelcore wallet, not being able to store Flux in an outside wallet, for example, right? There's stuff like that, right? There are things that are going to be on a scale of like fundamentals, and you can be like pretty close at the bottom. You can be pretty close there, but you're never going to be Bitcoin, right? That's just the fact of the matter, right? You're just never going to be like, there's only one Bitcoin. It's a Bitcoin maxi thing, they say, but it's true. Does that mean you discredit everything else? No. It just means you be realistic about it. Like I said, the only halving that matters is Bitcoin, right? It's the only halving that matters. That affects everything else, okay? So don't get delusional. Don't get caught up in community talk. Don't throw Caspa or Flux or whatever. And you know, if you're part of the development team, I get it. Whatever. If you're working on it, whatever. If you're just going to go out there and be a blind shill, be completely aware that that puts you in a completely compromised position. Okay. Because then you're blinded by that and you'll get yourself caught in positions financially that are not advantageous for you. Okay. So just be extremely clear and cautious about the differences between all of these. It could be your best friend that you've, loved for your whole entire life that started a new cryptocurrency and everything seems to be going good. And then boom, he rug pulls you. Oh, I never thought he would have rug pulled me. Well, bro, people problem. Okay. It just is what it is. Be careful out there, boys, okay? All right, so let's talk about the calculator. This is really cool. I don't know how accurate it is, but you can come in here and you can type in the number of animals, what type of animal. They just have cows and pigs, and then you can pick your miner, and then it'll tell you how many of that animal or how many it will take, right? So in this one, it says it'll take 4 cows to power one Bitmain Antminer S19J Pro. It's pretty cool. And it's linked down in the description below. Also, Scott's Crypto Mining is doing some other stuff. If you guys want to go learn from him, he's doing a lot of stuff like that. It's linked down below. Check it out. It has, you can pick the state here. So if we did like Texas, I think, it'll tell you the value of the methane produced per day. Yeah, it changes. So in Texas, for example, 1 cow produces 2.272 liters of methane per day at the value of $10.03 per day. And so if you mined essentially right? So you have to like see if it's worth it, right? So as Bitcoin, 1 cal would be this much Bitcoin mined per day on a Bitmain S19J Pro, which would put you at 586. So if you're going to be gathering the methane, maybe it's better to just sell the methane, right? But it all depends on like packaging it, how that all goes, right? So obviously there's a lot. We'll get into it at some point. I don't fully understand it. Here's the thing though. Actually extracting that methane off in like a farm setting is pretty difficult. Obviously the easiest time is going to be when the cows are like basically getting milked, that sort of thing. But you got to be able to extract that from the building, get it, you know, into a usable format. And then there's probably some sort of method in which, because what happens with all of this, just like natural gas in general too, which is you have the flare off, which I'm sure you guys have heard of flare, but the pipes can only be pressurized so much. But in the case like here where you make less, right? So you make less mining Bitcoin with it than you would selling it. You would probably only burn off whatever you needed to relieve the pressure in the pipes from your delivery mechanism, right? So that's that. Let's get into miner releases for the day. We got here the Gminer release, released yesterday, version 3.2. They improved compatibility with Caspa pools and supporting the K-Stratum to support mining on the Caspa node. And they improved Caspa, Ethereum, Classic plus Caspa, Ergo plus Caspa. The only updates over the past month have been for Caspa. I was going through all these miners and I was like, holy crap, the only thing that they've been working on, that any of these miners have been working on, is Caspa. So obviously bullish for Caspa from that perspective, I think personally. That being said, we talked about this before, with the amount of popularity that Caspa was getting, it added a bunch of selling pressure and everybody yelled at me and called FUD, but I'll just go ahead and what was this? Last month we said, look, we're just going to get up, because I'm trying to show you guys that the reason I piss people off is because I detach emotions from reality, right? And the thing is last month I was like, look, here's the problem. Caspa was going to experience some heavy selling pressure from the amount of miners coming in. And then this has been the Caspa chart over the past month. There is significant selling pressure, and this is always a problem that comes into play. And here's where things get even trickier. And this is where the people problem comes in. The miners are a people problem too, to a certain extent, sure. They're taking donations, right, to fund development in Caspa. That compounds selling pressure, because if you want to fund a development and you take it in the coin that you're developing for, and then you have to sell that coin to convert to fiat currency, you're adding additional selling pressure there. It can pose a problem. That's all I'm saying. Okay. So a lot of these are like basic economic things that for whatever reason, I don't know why, but you can bring up a very basic problem and it can be a repeated process over multiple currencies that you've watched happen. Like we had this problem with, we've had like all the problems with Ergo too. You can bring it to the attention, and then instead of anybody looking at it and being like, okay, maybe that's a problem, let's see what we can do about it, they just call FUD and shit on you, and then the problem happens. It's infuriating, but like that doesn't mean that we stop looking at this and saying like, hey, like it doesn't mean that we stop doing what we do, right? I'm worried about selling pressure from the development fund. I think that also GPU miners are going to get priced out here soon. with the Osprey and the all of the FPGAs coming on the market. So obviously that's a natural progression that we expect. It's going to go from that to hopefully probably at some point ASICs. If you are looking at like investing heavily into like mining Caspa, I wouldn't be looking at purchasing GPUs, right? So take that for what that is. Like personally, I wouldn't be looking at purchasing GPUs for this in particular. If I was looking at, buying, am I worried about the sale of the dev fund over 2023? Yes, probably. I'm probably worried about mining selling pressure through 2023 a little bit, just because of how popular Caspa is from the proof of work standpoint. And those are the things that I would be like, okay, like there's probably like a little bit too much selling pressure still on this right now as it currently sits. Does that mean it's a bad project? No. Does that mean that it's not going to go up? Like I said before, I'm going to be holding till 2025, so it doesn't really matter to me. But when you are like, if you were to go out and think like Caspa to the moon in 2023 or 2024, you just need to like bring that back to reality, right? That's it. Just bring that back to reality and consider it. Okay. Now let's talk about mining profitability. Should we switch now to the 4090 since it's out? Or should we continue to just do the 3090? This is something I was going to ask you guys about. Yeah, Telescopium, the 3070 and 3060 Ti aren't really close at all. It's better, but it's not like close. 4090 is fair, says John. 3090 still says flying high. Everybody just says, we'll just go. It seems like a majority 3090. We'll just go there. Well, the 4090 is not any better either. I mean, it's better at like Caspa, right? But that's different. Sorry, we're muted. I had some... I got you. Oh, we'll give it a second here and chill. Yeah. I had some nasal problems, so I tried to mute to clear my throat and then forgot to unmute. Boom. Thanks for letting me know, guys. All I was really saying is everything's pretty much in the negative at 10 cents a kilowatt hour, as you guys could see. Radiant's only losing 10 cents a day, and technically I think you can make it profitable at 10 cents a day if you tune in, right? So if you get it tuned in right now, these numbers are all kind of old. But if you tune in Radiant, you're pretty good off to the races. It's just, is it worth it doing it, right? At the end of the day, some would argue no, right? Like you can get like 800 mega hash a second tuned in at like 110 watts, I think it is, on Caspa too, which I think comes out to, I mean, it's still going to be negative, but it's less. It only loses 4 cents a day, right? And then you can get pretty dang efficient on, I forgot what the efficiency was. We'll check over on, we'll check here for you guys in a little bit on the live show on locals. Mining pool stats. I think we've been seeing Bitcoin go down in hash rate, but now it's starting to recover again, right? Because that winter storm hit, the hash rate went down, and then it's starting to warm up again. It's starting to hit like nominal temperatures, so we're back up to 285 exahash a second. The difficulty ticked back up, right? And then we got all the Ethereum coins. We got Ethereum Classic down 4.86% over the past 7 days and sitting at 127 terahash a second. Ethereum Proof of Work is up 0.08% over the past 7 days and sitting at 18.4 terahash a second. And Ethereum Fair is sitting at 2.42 terahash a second and is down 20% over the past 7 days. Zilliqa is still kind of holding strong too, I think, by the way, boys. Yeah, sitting at 15.62 terahash a second. It's actually down in price though, 12.67% over the past 7 days. All right, so the other ones is we got Flux, right? Let's go ahead and take a look at Flux. It's up 2.58% over the past 7 days, sitting at 5.6 mega solutions a second. If we take a look at Ergo, we're down 4% over the past 7 days and sitting at 30 terahash a second. Caspa is right down here, so we'll just go ahead and click over to it. 416 terahash a second on the network, down 8% over the past 7 days. Radiant was an interesting one as well, which is sitting at 31.34% over the past 7 days. So thanks everybody for watching. I hope you enjoyed the show over here. Don't worry, the show is not ending. Head on over to sonofatech.locals.com where we will be continuing the stream and we will be talking about all the craziness that you want. Do you like throwing on a tinfoil hat? Do you like cursing? And do you like just a general good old time? Well, come on over and check me out on Locals. That is linked up top. That is also where we will be handling all of the Q&A. And if you want to tip me, I appreciate all the tips, super chats over here, but I only get 60% of that. If you head on over to Locals, I get 90% of it. So tip me over there if you can, and I'd appreciate it. I'll also go ahead and get that link out to you guys right now. We are going to go ahead and hit the start stream as well over there, and hopefully everything's working. I think it's going. Yes, sir. And I will see you guys next Tuesday. We'll also be on Rumble if you want to be there, which I'll get that for you as well.